Good morning, everyone, and welcome to the first panel of day 2 of SuperReturn CFO COO. We are here to talk about this morning everyone's favorite topic, successfully navigating the pandemic. What was done successfully, not so successfully, and hearing it straight from CFOs and COOs who experienced it. We have a rock star lineup, and I will ask them to introduce themselves really quickly, their background at the firm, and what their current role is. Rob, do you want to start?
Sure, although I'm not sure I'm going to live up to the billing you've just given me. But hi, my name's Rob Bailey. I'm partner and COO of Pantheon Ventures. Pantheon is a solutions provider across private equity, private debt, and infrastructure. AUM of about $50 billion at the moment, headquartered in London, but got a global footprint, so got offices in the US, Europe, and Asia. Glad to be here.
Great. Kevin? I think you're on mute.
I am. Thank you. I'll get this technology down. Apologies. Good morning. My name is Kevin Early. I'm the European CFO for Ares Management. Based in London. We are a 160 million plus global asset management firm with strategies primarily in credit, but also real estate and private equity. We have offices across Europe, and as I said, I'm the partner European CFO.
Great. And Shaun?
Yeah, hi. I'm Shaun Collins. I'm the CFO for Europe and Asia for Apollo Global Management. I'm trying to live up to the rockstar billing by growing my hair through the pandemic. And that might be the only thing that's rockstar status. So I've been at Apollo for 7.5 years. Based in London, and my role has grown as Apollo's presence in Europe has grown. And we are now a firm with more than 400 billion in AUM.
Great. And Mike Dutton.
Thanks, Tom. Good morning, everyone. My name is Mike Dutton. I currently am a senior advisor to Capital Group, among other U.S. private equity firms that I consult with or advise in various matters, especially in the emerging manager area. So lower mid-market is a space where I've spent a lot of time during the pandemic crisis. Previously, I worked at very large private equity firms, large LPs, and have been in COO, CFO roles at various times in the past.
Great. Well, thanks, everybody. And we've broken up this session into really 3 categories as it relates to the pandemic and what's happened over the last 6 months. And those 3 topics are systems, people, and investing. Before we go there, if you could just kind of go around the horn, and I know everyone's wondering if people are back in the office. I think all 4 of you are still working from home, but has anyone had offices that have kind of fully opened up yet? I know there might have been some experience of that in Asia. Shaun, you mentioned that. Any that are fully open, or is everything 50-50 or 100% at home?
So if I start I just with the mention of Asia, Tom, within Hong Kong we had a spell of being at 50%. With more recent spikes, we've now encouraged people to be back at home. From a London perspective, we have a very small presence now. We've gone through the processes of putting in the protocol of allowing people to apply, which I think I'm sure other people will talk through too. And then from a European perspective, Luxembourg is also a little bit of ahead of the game. So it's a small office. And so as a representative percentage, we've got a few people in Luxembourg, but that's where we're at. No offices are yet fully operational in terms of people in there. Me myself, I've now spent 6 months in Oxfordshire, so have not yet been back to the office.
Yeah, Kevin, about the same experience for you guys?
Yeah, so we've opened our offices, similar to Shaun indicated, across the continent in Europe, so Luxembourg, Stockholm, Frankfurt, Paris. Much smaller offices, so following the protocols and managing some of the social distancing has been manageable. Obviously, we introduced the opening of our London office in the beginning of August with a target take-up of around 20%. As of yesterday, I think I understand our top attendance was about 6%. So while it's voluntary, and we've told employees that it's voluntary through at least to the end of the year, we've seen some people either just based on the desire for a change of scenery or increased productivity come into the office, but it's a very low take up to date. So I've been in once. I plan to go in again tomorrow, but given the protocols again that Shaun alluded to, it's a very different working situation. So I think for us to get to full capacity is still some ways off.
Yeah. Mike, I know you have experience with emerging markets. And what's been your experience as a return to the office?
In Asia, we actually have people back in offices, not full time, but partly, and it depends country by country, a little bit city by city. On the whole, people are encouraged to work out of the office. It's been interesting in the U.S. Capital Group has basically almost closed and really encouraged people to stay out of the offices. But some of the emerging managers and smaller private equity firms I work with, actually one here in the Midwest I'm working with right now, the offices are open, smaller number of people, but people are really trying to get back and recreate some of the team chemistry and some of the things that we were really missing over the last few months.
Yeah. How about you, Rob?
A very similar story to that you've heard already. We in Hong Kong, we were going to open up our office, but there was the second spike there, so we went back to a working from home environment. Our London offices are open for those that want to work, but we've been clear that there's no imperative to go back this year, although some people are choosing to, but under the same kind of protocols everybody else is talking about. We started off trying to have a kind of global standard as to how we were treating everybody, but it's having to become more nuanced based on local rules and also sentiment as well, which varies between geographies.
Sure. And from a service provider perspective, we are our Zurich office is 100% back in the office. I'm actually in the office. It's not my living room. I would come in about three days a week. And we're offering same kind of thing. People who want to come in, great, more for camaraderie and connection more than anything. But everything's working, certainly from home. So moving into the experience of the pandemic. So we're back to March 21st-ish, mid-March, and coming to the end of the first quarter. And Shaun, I think you had a really good story around the inertia or the impetus that kind of forced a business continuity plan because of the first quarter close. Can you talk a little bit about that from a systems perspective and how everyone rallied around that?
Yeah, I think you're right, Tom. The first thing was really getting everybody set up at home. We weren't an organization that were users of Zoom, and we quickly became that. A number of licenses were put around the organization, and everybody got on with it. And then we put in fairly clear guidance about kit that people could expense, so that for those people who hadn't got a home setup, they could get themselves set up home practically with any sort of hardware that they needed. But my point really, I think, as I left the office on March the 18th, we were obviously in the process of doing the Q1 valuation cycle. And really for us, it gave a real practical focus of actually getting Q1 done. And so it was, some of that was also the building the relationship with the deal team and the investment professionals, because they were obviously looking at their portfolios from an asset management perspective at the same time as we were thinking about how we were going to help to guide and come up with Q1 values. And so there was a real output that was required and a real focus on getting through that first quarter. And so, relationships between us and the investment team were very focused on that. And as they were thinking about, the timetable for recovery and the rhetoric that everybody's heard of, is it V, is it U, or is it L? as they were thinking about asset management and where they were going with that fed into the Q1 valuation cycle. And so it did really feel like people were very focused together on an output. And I just think that got people, on the front foot from the very start. And certainly, from my perspective, it did really give a feeling that we were working towards a common goal as an organization, which I think really got us started in the right place.
Yeah. Rob, can you talk about your infrastructure and kind of how quickly everything was up and status quo, if you will?
Yeah, sure. Just to pick up on the point that Shaun just made actually, we had a very similar experience. There was this it was almost like a siege mentality around Q1, which meant actually really, really positive cross-team working. I'm a big proponent of trying to fuse the middle office and the back office with the front office, and it really helped with that. But I think we're going to talk about sort of the people side of it later on. From a systems perspective, we were very pleasantly surprised how resilient our systems were. When it looked like we were going to go into lockdown, we started to do increasingly large working from home trials just to see what happened when 50% of our populace worked from home, 100%. Actually, when we did the 100%, that was the last day that we were supposed to be in the office. So it then became a very live trial thereafter. So our systems resilience was really good. We'd implemented Microsoft Teams as a collaboration platform before this happened, but actually the use of it when you're in an office environment wasn't, the take-up wasn't as good as we were hoping. So that actually has proved critical across the working from home environment. It's been fantastic. Some other points we've had to double down on cybersecurity. There's been a real spike in attacks on companies. We've got relatively sophisticated technology in place, which so we can monitor the attacks on our own systems. But vigilance has been really important with the controls-based approach. We've noticed a few things slip through the net for some of our GPs, which we've caught on their behalf. So cybersecurity has been a big part of this, and also working with vendors such as yourself and seeing what their BCP plans are to make sure that they can still service our capital.
Yeah, Kevin, saw you nodding your head when he mentioned cybersecurity. Do you have anything to add there?
No, I just think a lot of the same things. Obviously, as Rob mentioned, we were used to some working from home protocols, but not having the entire office out. So whether it's, wire approvals, the authorized signatories, online approvals, not all of them were necessarily set up for remote-based approvals or, had the full cybersecurity. So again, we kind of bolstered our Citrix environment for a few applications. Again, working with vendors on a few things, our banks, just to make sure that cybersecurity is paramount. Again, normally all our trading would be done from a Bloomberg terminal in the office. We've had to pivot slightly, and what's been surprising is with how much ease we've been able to transition into a remote environment. I think we feel good about the controls. Obviously, I have some sympathy for the IT guys who are probably working, between just the general queries of how do I set up a printer and also, real legitimate infrastructure issues have been very busy. But again, not dissimilar to Rob and Shaun. We've really solidified and kind of, managed to perform in this environment. So I mean, the infrastructure has really held up well, and that's the initial building block, I think.
Yeah, Mike, I know being based in the West Coast of the U.S. might have had a different experience. Anything to add there around the systems piece?
Capital Group had extensive business continuity preparations in the past. We actually ran drills, and we had different centers set up in anticipation of earthquake or some other type of disruption. We could apply some of those lessons here. I mean, obviously, we couldn't all go to the remote sites and use our redundant office systems that we had established. But the preparation we did in the past really, it shined through. I mean, I think it was a distinguishing factor. We had seamless communication with deal teams, which are spaced out around the world, as well as LPs. And I think that enabled us to get through a difficult time. That's in stark contrast to some of the other firms I work with, which are much smaller, which really struggled and really were using some rudimentary, not very secured techniques during the first few months of the pandemic. And I think that has changed a little bit as we've gone through the summer. But huge contrast, for firms that are, managing less than $1 billion, and they're doing, they're operating with, maybe a dozen or so people. It's been a very different situation.
Yeah. And I would say, this last note on those systems, I hate to say the new normal, but certainly video chats, virtual meetings. I mean, when a grandmother can order groceries on her smartphone, and the technology leap that has been made in the last 6 months, I think it will certainly change the environment going forward. So the next area is around the people, and this probably I think all of us would agree that the greatest impact has been to the day-to-day interaction with our colleagues. Rob, you had a good example of some new hires that you brought on. What's been some challenges there that you probably wouldn't have faced if you hadn't had the pandemic?
Yeah, so two observations. I think it's been fine if you're well tenured. I've been at Pantheon 10 years, so I know all the people I need to speak to, and so you rely on that network quite heavily. I think new joiners had a slightly different experience because they're not embedded in the same way in the organisation. So navigating who to speak to, how to get things done in a remote environment is more challenging for them. So we've had to concentrate quite a lot on how we ameliorate some of those type of issues. And then the other observation that I'd make is that I think we all run what I sort of term an apprenticeship type model, where junior people learn by shadowing. That's much more difficult to do when you're not in an office environment. They can't be standing over somebody's shoulder. So we've had to try and work out ways of training people in different ways.
How have you done that specifically? Is it just more often connection through new hires?
Yeah, it's more often connection. There was some rudimentary training on how to manage teams from home. So and we were learning from sales forces who've been doing had distributed models for years, and just encouraging people to check in on people and not just assume that they know how to do things. So some of it was pretty basic but necessary, but it has really increased the burden on managers. So things that they could do just by, as I say, somebody standing behind their desk takes a lot more effort and manager time in order to make sure it's done and the person understands it.
Yeah. Kevin, I know you had some from a firm perspective. I know your HR team's been very proactive. Can you talk a little bit about some of the things that you did globally as a firm as it related to people?
Yeah, so I think we've had two approaches, kind of a macro and a micro, as you alluded to. So from a firm-wide standpoint, we're over 1,200 people. So we've probably had more what we call town halls, fireside chats, COVID updates, and not really just set on like the office protocols or testing or things like that, but really a lot of focus on things like mindfulness. We've reached out to employees and set up things, whether it was for physical activity and exercise apps early in the process, working from home trainings, really just to get people engaged. We've had a speaker series where we have brought in third-party speakers. So it started where we were basically using our AGM speakers, who obviously no longer had a gig to speak at, but also just started to bring in people to speak, whether it be on current economic events, political climate. We had people in to speak about the Black Lives Matter movement, to our employees globally. We had Madeleine Albright on, Janet Yellen, other people, really just for, an hour and a half, 60, 90-minute kind of discussion, similar to this with Q&A, really just to bring the firm together. So between that and really updates from management on the state and health of the business, I think was meant to create that sense of connectivity. Obviously, people weren't getting that by being in the office every day. The informal conversations or the catch-ups that would happen over the water cooler in the coffee room, have passed. So this was a way to kind of bring people together. I think we spent a lot of time on people, and then the next step of that was kind of bringing that to a micro level within our own team. So lots more meetings, lots more discussions. Hopefully not to the point of paralysis, but again, I found myself having to check in more with people just because you're not walking by a desk and seeing someone. You're not grabbing a coffee or going to lunch. So it ends up being, whether it's a one-on-one Zoom call or a team discussion, it's a lot more macro engagement.
Yeah. Mike, I know Capital Group, has a heavy focus on employee engagement. What has been some of the things that you've seen, whether novel approaches or just every day?
Oh, we did some of the same things that Kevin mentioned a minute ago. We also have an extensive intranet, which is accessible and has served as a way to kind of pull people together. This is a bit maybe non-corporate or unorthodox, but one of the things I've done is I've met with people outside of the office. I mean, we're fortunate in California to have good weather. It's relatively safe, we think, to meet with people outdoors. We have a big outdoor campus, and then we have other places around the area where you can meet. And, if you keep your distance, people have different views on do you always need to wear a mask or not. But if you wear a mask, keep your distance, I found that to be very effective for keeping in touch with to try to bridge some of the gaps that my colleagues were referring to earlier. Young people, maybe people who haven't been through a crisis like this before, even to help some people do some hiring and some training. It just is a lot better for somebody starting to have some in-person contact, even if it's from 10 feet away. So we've done that, but we've also relied on sort of the big company framework that was alluded to earlier. So I think it's the situation specific, but I mean, basically, this has been a big agility drill, right? So I think one of the things that we've learned is, it's great to have the big company framework and overarching structure that you can rely on, provides consistency, it gives people a lot of assurance, but there, where you can do some things that are a little bit creative but not risky, supplement that, and especially for smaller organizations, you should take those opportunities.
Yeah. I think you make a great point about the in-person. We've had, when we've had a few people come into the office, we've made it a point to, we have a few pubs here in London, and we'll go sit outside and just enjoying some normalcy through that, even if people are wearing masks or 6 or 8 feet apart, still gets you a bit of a human connection. Shaun, I know obviously as a global firm, you've done some of the similar things, but you mentioned kind of even a shift toward some of the diversity conversation. If you could speak about that, and also talk about how Apollo, has really focused on its people and focused inward and tried to meet some of that engagement goals.
Yeah. I mean, there is almost like 100% parallel in the points that Kevin made around the mindfulness and getting people together much more often in terms of communication about what's going on in the macro level of the firm, and I would echo that rather than repeat that. I think the firm has obviously done some quite big ticket items in terms of employee engagement at the founder level, but that really has sort of filtered through the organization in terms of putting together matching programs quite quickly and really publicizing where people might have been, working in the UK to put masks as off their own back to get to the NHS at the early start of the crisis, when just to actually really highlight where people were getting involved, which is great. And I agree with Mike. That went out over the intranet, and people could get to see that happening. And so, that has really started to be embedded much more into the culture, which I think, again, when you look for silver linings as we go through this pandemic, that's been a good thing. And there is also, and it's not just, if you follow Apollo on LinkedIn, you'll see a lot more engagement with the world through that as well, in terms of the corporate comms. Much more is now coming out, and that has filtered much more recently into us feeling like we want to put stuff out there about what we are doing in the diversity space. And again, you can leave the cynicism at the door. I think it's been a really good thing for that. The world is becoming more aware, private equity is becoming more aware, and it's filtering through the organization. And you know, we've recently hired a head of diversity into Apollo. And, you know, I really do feel like this is something that is getting embedded in the culture. And I think that, as I say, I do think that that's a real positive, and it gives employees something else to get behind and really feel like, if you know, the firm's doing it, and we as individuals are doing our bit where we can, and being asked to talk about what it is that we're doing in that space. And, you know, as other people have said, I think if you're missing having that engagement in the office physically, actually doing other sorts of engagement, I think is motivational, and it continues to build the firm culture in a time that has been really difficult. So, you know, I obviously, as all of us would be, I'm really hopeful, but more I actually expect that this part of cultural change will stay within the organization when we're all back in an office together.
Yeah, one thing that I noticed also, Shaun, you hired a head of citizenship.
Yeah.
What is that role focused on?
So again, so Lauren started last year, and that really is thinking about employee engagement in the philanthropy space, and you know what we can do in terms of community action as well. So you know, be that just financial giving, but much more than that, about you know where people want to give time in getting involved in organizations, and doing that in a much more joined up way. And so as part of that, a small example is to implement a matching program in the firm, but it's much more around making sure that the whole firm is aware of at small scale and big scale what people are doing. And you know, Lauren acts as a pivotal point in doing that.
Great. Yeah, so our last topic is the investment process, or investing in general. And I will say that it's honestly a bit surprising. Kevin, your first distressed vehicle was oversubscribed by 75%. Shaun, you guys went over 400 billion. You had certainly a mark-to-market dip in the first quarter, but that came right back in the second quarter. So I think your fundraising is continuing. And Rob, you're still very active in the defined contribution, kind of bringing that in private capital investing to Main Street, and that being a kind of a steady annuitized flow of fundraising. But Kevin, can you talk a little bit about how can you tell us about the investment process? I mean, we've heard things like virtual due diligence. Obviously, people can't travel as much to potential targets. Can you talk about how that has changed?
Yeah, I think, look, we talked about this in our pre-meeting. I think some of the mechanics in terms of how we engage, whether it be with sponsors or borrowers or potential investment targets, has changed. As you said, there's virtual due diligence. There's a lot more, management meetings via Zoom calls and things like that. But taking a step back, I would say probably our underwriting, our investing hasn't really changed. Obviously, it's a much different environment, and we're hoping, we've been hoping that actually this disruption would create opportunities, whether that be pricing dislocation, competitive imbalance, any opportunity for kind of us as a well-capitalized firm to capitalize on the situation. So I think, we've had to be creative. So again, whether it's, more virtual site visits, enhanced due diligence, lots of due diligence. Our investment committee meetings we historically would take place in a room, and everyone kind of going together with a free flow of conversation, has now moved to a more virtual environment, done via Zoom, different protocols. But I think we continue to invest. So we spent probably the first part of April, May, maybe a little bit of June, focused on our internal portfolio and just shoring up the investments and investments we have in the ground. We've been very opportunistic to that point, and continue to invest where we think we find strong opportunities.
Yeah, Shaun, how has your investment process changed?
Not as Kevin has alluded to, the protocol is still the same. A lot of investment committee now done over Zoom. I would very much echo what he said. As we went through March and April, people were looking more at asset management. I think there was an expectation that there would be more market dislocation in terms of opportunity in the space, and with all the government and intervention, as we're aware, some of that opportunity didn't arise as quickly as people expected. Apollo has been very focused still in the insurance space, and as you alluded to, in Q2 got two big transactions announced, and so there is still very much opportunity, I think, for us who support the investment professionals. It's been more business as usual. Some of it has been new asset classes, which has been relatively challenging in this environment. I think that's where it's been harder. As we talked about at the start, if you're just closing the books in a regular process, everybody sort of knows what they're doing. If you're starting to look at new asset classes and new structures and new jurisdictions, actually corralling the right people to get together in a room has been more problematic. I do think it makes all of us a little bit more organized in terms of getting meetings on the calendar well in advance, prepping materials in advance, getting them out so that people are actually, who have got something to say, have got an opportunity to do that, rather than, as Kevin had suggested, that normally it would be a free-flowing dialogue in an investment committee. I think people do need more chance to pre-read and get their points on the table in advance of that. So there's been a bit of that going on, but in terms of, are we still investing? Are we still divesting? Is there still a lot of investment activity and fundraising? Yes, it's all still going on, and we're finding a way to do it. So whereas physically we've been in different locations, the feel hasn't been a whole lot different. August has been quite nice, and as we now come back in the day after Labor Day, we know what's coming, right? It's going to be a busy run between now and the end of the year for sure.
Yeah. Rob, I know from an operational perspective, you probably oversee that investment process. How has that changed for Pantheon?
Well, the themes are very similar to both Shaun and Kevin. Not a huge amount has changed. It's a bit different for us because we tend to work with known counterparties in a fund of funds environment. So we haven't had a huge amount of new investments with completely unknown parties. It tends to be reinvestment with managers we know and we trust. But we've been really active through Q1 and Q2. The deal volumes are actually higher than they were for Q1 and Q2 2019, albeit the capital was less. But as Shaun mentioned, we're expecting a very busy Q4. We expected a bit more of a switch to opportunistic strategies. We expected the value depression to carry on a little bit longer than it has done, but it doesn't mean that there's different opportunity sets and different pockets of value at the moment. So surprisingly little has changed.
Yeah. Mike, how about from an emerging markets focus? You guys are so focused on that. How about from a portfolio company perspective, or even your just general investment process?
So it's really interesting. I think it's very region specific and company specific. Our emerging market portfolio, we were able to get a big exit done in the beginning of 2020 in January and February, before the virus really brought everything to a halt in the US. But I was working over in Europe at the time, and it was you could see things were starting to slow down. It was getting more difficult. That company was in Africa, and that turned out to be an extremely timely exit. And it would have been more difficult to make it all happen 6 months later. But we got that done in time. We also were able to get an important exit done in India. And these involve a lot of toing and froing and a lot of, when you're a minority investor in emerging markets, it's a very different thing than selling a big company through a big LBO process in the developed markets. We're able to get that done. In Latin America, we've actually seen a few of our companies do very well, surprisingly. A few of them continue to trend down. I would say in Asia, we've generally seen a faster bounce back across all of our portfolio companies than we anticipated. Because we're spread out, we're able to address the things that you were getting at, Tom, in terms of using a lot of our traditional processes, phone calls, less video meetings, although we have implemented a lot more video, but we're able to communicate pretty much as normal. With some of my other clients and things I'm working on, which I think are very different than everyone else on the panel in the lower mid-market, it's been very different. So lower mid-market in the US is an area of huge activity. literally thousands of private equity firms. And so in the fund formation or the deal prospecting area, it's been quite different. And really just in the last few weeks, for example, in a few hours, I'm here in the Midwest. In a few hours, I'm going with some investment professionals to meet both LPs and a few management teams of companies that are in the hot areas that we've seen over the last few months really turbocharged. And I would just say e-commerce broadly defined. But some of these things you can't do over Zoom when you don't know the people. But you can meet someone in a huge factory, or you can meet someone outdoors like we're talking about. So this is where, getting off Zoom and back into the mode of meeting people and getting in person with them. One of the things I had to do was drive around the country over the last few months. So I live in California, but, my wife and I really did not want to get on too many airplanes to do things. So took the opportunity to drive and keep safe distance. We're actually doing some of that again. So it's very different than the big end of the market and the highly proceduralized, template type approach. But in the low end of the market, there's a lot of restlessness and a lot of desire to get back to something closer to normal.
Right. Well, thank you all four. You will always be rock stars in my eyes. We appreciate your time. Hope you enjoy the rest of the conference.